afternoon and welcome to the Vivid View. My name is Matt Brennan and I'm from Vivid Financial Services. This is episode 4 in our series, Your First Home Loan. And up to date, we've spoken about some tips that you might want to use before you meet with your mortgage broker. Secondly, we covered the NCCP and how it actually protects you throughout this process of you obtaining credit. Last week we touched on what the broker's going to do when they get your information. So this week we're now talking about the banks and the lenders. What do they do when they get your application? Well, firstly, these days, being the digital age, most applications are submitted online through a software. Generally what will happen, most of the major lenders will have what we call a credit score. Now that credit score is a computer-generated assessment system that assesses the applications that goes through the system. Unfortunately, in some circumstances, applications are declined at that step. The broker then has to go back and discuss with the lender and see if we can change it around and maybe resubmit it. But in general, what will happen is that the application will be submitted along with your supporting documents by the broker. The lender will receive that. It'll go to a first check system, which will be someone who will be looking to see what supporting documents have been provided and do they meet the checklist requirements. If that is the case, step 2, it then goes through to the credit department who will assess the deal in its full entirety. And they'll assess parts of the deal that refer to your income, your liabilities, what you're looking to do with the application form in regards to you buying a property or you're refinancing, your credit history, which is a very important part of the process, and the overall match to the bank's policies and procedures. If that gets a green tick, it will then be conditionally approved. Now, under normal circumstances these days, we can get a valuation up front for your application. If that's the case, the loan will then go through the next step process, which will be for formal approval. If not, the bank will then order a valuation and then move that step after that. So once we have that process completed, we have the conditional approval. If the loan is over 80% loan to value ratio, it would be required to be looked at by the mortgage insurer. Now at this particular point in time, the bank will send that application to the mortgage insurer. They will then go through their process of assessment, due diligence and so forth. The loan could then be derailed at that point. The bank might like the loan, but the mortgage insurer may not. So there is a chance there that it could be declined. All being well, the loan will come back to the lender saying it's approved. They will then offer a formal approval to the broker, which will then be followed by some documentation with a letter of offer. All being good, with a standard application with no problems, this process should take about 2 weeks. Some of them can take 3 or 4 days, some can take 3 or 4 weeks, depending upon the strength of the deal, the complexities of the deal, and the way that the loan's been submitted by the broker. Look, we've run out of time for that this week. So what we're going to talk about next week is the process after the approval's been given, what happens then, and we'll talk through those steps next week. So thank you very much for coming on board today. As always, if you've got some comments or feedback, please put them in the box below, or if you'd like to jump onto our webpage, which is vividfinancialservices.com.au, complete your details and our contacts, and we'll come back to you within 24 business hours. Again, please stay safe, have a lovely weekend. See you next week.